Hello. In this video, I'm going to talk exclusively about the MACD moving averages results. And for this, I'm going to be strictly within the 3C exchange today. Now, I have up first version 4. After several days of the paper bot not working, it's finally working. So there's no results here to report at all. I can extrapolate a rough idea of how it will perform based upon this information here and from versions 1 and 2, which I'm going to go over very shortly. So right here, it's made $1.80 pure profit from 14 trades. Now that's again with the 3 commas website being completely messed up for 3 days straight. Hopefully, I will be able to continue to collect results on this analysis. If not, I'm just going to have to do a manual analysis off of TradingView. And I may end up doing that anyway, just to get a rough idea of what to expect out of it for a long-term process. So I'm going to take this completely out. This is the control. Version 3, which was built exactly as the original video that I discussed about. And as you can see, it's pulled in a pretty generous little profit. That profit has turned out to be $3 today and change. Not bad. Now this is using the inverted logic of the EMA 200 line. So $3.32. That is a pretty good profit for this strategy. Now remember, it only has a 62.5% success rate. So out of every 100 trades, 62 of them are going to be profitable. That's still pretty good. Now let's go back to version 1. Version 1 pretty much pulled off an ace. This has been the big winner all the way around. This is the one where I simply set out on my own to reproduce what I saw on the chart. I didn't use anything in terms of the audio for building this strategy. So $11.56 for one shot on version 1. Now version 1 has a real downside that it has a lot of retracements. That can be a real problem if you're on a very limited budget. I didn't see very many retracements with version 3, and version 2 turned out to be the most conservative. It only brought in $2.14 and absolutely no retracements. I did not see any at all. So based upon the results from versions 1 and 2, I can expect version 4 being a combination of both to represent the best of both and have roughly a profit range in the middle with minimal retracements. So if you want rapid profits and can handle the budget of the retracement, version 1 is the home run winner in this case. Point blank, it outperformed all of the other versions to date. Hands down, straight out, this is the top performer right now. If you have a very fixed budget and you want no retracements or extremely few retracements, version 2 brought it home. And now this is in both cases. Neither of these use dollar cost averaging. So the DCA module would tone this down a lot more and probably boost the profits even further. So depending upon your approach, you can pick the ultra conservative version 2 or the ultra aggressive version 1. By themselves, they perform well. Put them with the DCA module, and you definitely have a home run maker here. It will take a little longer for it to achieve what it needs to do, but it will definitely do it very generously and on a very thin budget line. In both cases, the budgets for both of them compared to the savings account module without the dollar cost averaging module in strategy mode is incredibly thin. Even version 3, the inverted logic for the EMA 200 line, it still did pretty good at $3. So all three of them work well. The only difference, in my opinion, is just risk assessment. So let's go ahead and clean these out. Let's open up TradingView. Here we go. And let's look at the charts. Okay, we got some test analysis going here. Let's get out of this. Let's go to the savings account. Okay, right now I've got Nano loaded, which is a good thing because it's something that needs to be discussed. Right now it's at 33. My out point is 38. I suspect it's going to continue to go down. It's not got much more before it closes out. I've thought about going ahead and just getting out of this, but if I do, this is going to be a hard loss. If I wait for it to hit the bottom and then scalp its way back up, it will regain quite a bit, if not everything, that it's lost at this exit point. So for now, I'm going to let this one play out and let it go as it is. Now let's get into the MACD version 4, which is the combination of versions 1 and 2 with the dollar cost averaging. Now you can just put your alerts on the MACD and not use dollar cost averaging altogether, and you will expect your results to be close to version 2, a little bit more. They won't be anywhere near version 1, but you won't have the retracement of version 1. So I would put this right now at about a 75%, just with MACD as your alert frequency. Adding the dollar cost averaging, I would say a clear 90%, but you will see a difference and a slowdown in the amount of purchases that the dollar cost averaging will add to your framework. Now, specifically with dollar cost averaging, I am using strategy only, and I've also increased the profit slightly to accommodate my fees and slippage. So what you're looking at is a complete rendition of that. I have the sideways breaker on, although I don't know if it's really that beneficial with this approach. And I only have at risk a maximum of $111. Very tight, very limited exposure, because this does very well at eliminating unnecessary signals. For example, here's a buy signal that I finally got in this morning. Let's trace this back and see how long it took to actually get there. Okay, the last version 4 signal was on the 15th. Today is the 26th, 11 days. So as you can see, very conservative. And it got way up here above the deviation. So this looks like it might have pulled in a 2+% profit. So if you have this running on 10 different coins, you're going to be able to use a lot of coins for very few positions. So this strategy, while surgical, keeps a lot of your budget free. And that's important. Because as you continue to go back into the history, here we have an exit breaker, or excuse me, a sideways breaker, but this entry only took 2. That's it, 2 entries. Now, of course, you would need to balance this with the number of trades. But if you're only using $50 at most per trade, and you have a budget of 1,000, you can trade 20 coins simultaneously and come out with some pretty good rewards. As you can see, this is a very surgical, very precise algorithm. It does well. Even with this big dip right here that messed up a lot of people. Notice it gets in back here, gets out right here, skips this entire mess, and it just waits. Very good, very simple, very direct. So there you are. Here's another entry. This one took a little bit of time. Now, because we're using strategy to sell, it didn't take this exit point, even though it's above the take profit line. It actually waited and got a better profit over here. Still, 1, 2, 3, 4.5 days worth, only 1 position, no exit breakers, or no sideways breakers, excuse me. So very good, very methodical, very cost effective. So with $1,000 budget, this and even just 10 coins is a good way of hedging against a very rough and volatile market, especially right now when the market is in such a teetering state between bull and bear. Many investors and strong economists believe we are on the verge of another bear market. This kind of a strategy is the perfect strategy for that approach, because it will capitalize on that and only get in and out at the best opportunities. As you can see, a lot of markets. Here's a couple of more dips. Completely missed it altogether. Gone, done, period. Not even in the market. Even if you were in the market, the combination without dollar cost averaging would have got out right before all this chaos. So as we continue to scan the market, here's our entry point. Took a second position. Here's our exit point. So far we've only done 2 positions before it's exited the market with a profit. And the profit has always been above the 1.5% I've wanted. So if I was to go on the basis of what I'm seeing right here, having a $50 budget per position is genuinely a good approach to go, and it really maximizes the effect of my budget. So this approach for multiple coins will definitely give you a good and reasonable break even. Here is a quick in and out. Buys in, exits quickly. Let's clear this out of the way. There we go. So here's the entry point, here's the exit point. Over here, same thing. Entry point, quick exit point. Now in this case, both are close to the profit margin, but that's fine. 1.5% is still quite nice. Okay, this one actually took a little longer, it seems, but still only 2 entry points. That's still not bad. So this one is patient, but this patience pays off by significantly lower budget requirements. So this could easily trade all of the top 1 billion market cap coins and come out smelling like a rose at the end of the month. Again, a dead zone here, not much market activity. Here, a good entry point, a good exit point above the profit line. Same thing here, a good entry point, a reasonable exit point. So if you're looking for a surgical process with minimal budget, version 4 will give that to you, and you'd expect performance results roughly a little above version 2. But if you repeat that for 10 or 20 coins, you will very easily break even at the end of the month with minimal risk. So version 4 has the least amount of risk. Version 2 is a conservative one, but you still have about the 70% win ratio. Version 1, profit-wise, about 62.5% win ratio, but you're still going to do very well, even though it has a lot of retracement. So from the standpoint of the analysis, version 1 is the clear winner for profit. If you're looking for profit and can handle the additional risks, version 1 as it is the way to go. If you want to tone down the risks, add dollar cost averaging to it. Take version 1, add this kind of a dollar cost averaging, you will tone down the risks and still come out very wise. You will need to double check your exit positions on version 1 because you'll probably need 30 of them just to give version 1 extra padding. If you have a budget and you need to stick to that budget like glue, version 2 definitely does it. And so does version 4. Now, same thing, if you take version 2, add on dollar cost averaging, you will increase your profit ratio. It might give you more than $2 a trade, but overall, it is the most conservative. I personally prefer version 4, which is the combination of both 1 and 2 to give me the best of both. I get the frequency of version 1 to some degree, and I get the protectiveness of version 2 to some degree. So I get a nice middle ground. I add the dollar cost averaging in there, and I have pretty much what would be considered a 90% win ratio on just about any market condition. And with the dollar cost averaging, I have a very limited budget requirement. So I can really do well. 10 coins, $100 positions, I'm looking at most $2,000. 5 coins, $100 positions, a little extra padding. Even if this takes up 2 positions, I'm still within my limits. So very easy, very simple. This is where you want to spend and focus if you have a very limited situation. Be sure you run through and analyze every detail based upon the coin you want. BAT is not necessarily a good choice of a coin, but it does well with this kind of situation. A coin that would probably be a little more difficult would be XRP, as it naturally has a long-term sideways motion to begin with. So even it is going to produce just a little longer. Now here you can see And here you can see buy and sell signals that are above the mark. So it might be worth trading XRP without the dollar cost averaging. Then again, that depends on your risk assessment. XRP, as you can see, very sideways. Not much traffic here. Picked up the signal. Here's the sideways breaker. So 1, 2, now remember, it did not take profit here because this is strategy driven. No signals here. And this is going on quite a bit. 3. So we're at 3 positions already. Another sideways breaker, 4 positions. But notice the sideways breakers are only lining up with the actual signals. 5 positions. 6 positions. 7 positions. 8 positions so far for this coin. So it can be a little bit difficult to work with a coin like XRP. So that's something you're going to want to pay attention to when you're actually investigating what coins you want to work with. These coins are going to be a little difficult. Let's see if we can find a coin that might be reasonably rapid. Should it be overlooked? No. Should it be your only fish in the pot? No. Always leverage against different conditions. Here's a nice in and out. So ZRX looks like it might be a little more productive in terms of frequency and also a little bit more budget conscious. But still, XRP is within the $100 boundary I put down. Will it stay in that boundary is a different question. So again, focus on your risk assessment and your budget. Focus on mitigating those risks as much as possible. ZIL is going to be a difficult coin just because it has such a low market cap. But again, it can still be very good. Right now, it's got 3 purchases into the system. But it's also a sideways coin, which means it's going to take a little bit of time to do traffic. How much time? That depends on the market. As you can see, it goes quite a bit in a quiet period where it just won't get in or out of the market easily just because the signals don't support it. Good coin to have, but I wouldn't put everything on it. So search your coins. Look carefully. If you want strategic and surgical, this is the way to go. Looks pretty good. You still got some gaps in here, but nothing over the top. No signals here, and this is the high point. You do get out here, but from the standpoint of the market, you don't know what's going on here. This might be a good place for a manual sell, but this is still a good place if you just leave it alone. There's really no way to know whether or not you should take this kind of a situation. The signals didn't support it. So the algorithm didn't, but it still got well above its average. So from the standpoint of your risk assessment, those are all things you're going to have to really keep track of. And again, I'm using strategy for both my driving conditions. You can very easily use a flat take profit for your out position, and that will have an impact on the whole chain. You will not get as much profit, obviously, if you get out early. So that is something to be aware of. But at the same time, you may get more opportunities if you get out early. Things to think about. Getting out might be better if you do it early. Some coins perform better this way. Other coins perform better by using the strategy. Always be sure to weigh out your risks and the circumstances of your own financial situation. This coin looks like it might actually be more stable using a take profit versus a strategy approach. But again, it's something that you have to consider, weigh in, and really investigate. Although here, look at the profit on this. Now you've got a sideways breaker here, but still, look at this profit. These are all things you have to think about and plan out and really consider. Don't take shortcuts with your risk assessment. Evaluate and examine all situations carefully. Being a retail investor doesn't mean you need to sacrifice your profits. It means you need to be more strategic about your profits. And being more strategic means weighing out these kinds of decisions. Until next time.